All right. Good morning, everybody. The spot gamma founders notes is not updated for this morning. So the one that I shared is from last night. And that's okay because they got a lot to offer in the PM edition. And when the AM edition comes out, then I'll throw it in the Discord. No big deal. I think it's worth having both. Some days they get it in, before I start, and just some days they don't. It seems like this week they've been a little bit behind the curve. One thing that you want to focus on when it comes to that is these levels down at the bottom. And I know this one was bigger last night. They had a lot to say. This is a proprietary number, the spot gamma index levels. And if you remember yesterday, it was like at 2 point something. It goes from a -4 to a +4. Today, it's basically flat. So there's no edge there one way or the other. Green on the screen, second day in a row. If you remember, we were looking like this yesterday, a little bit of a rebound from the drop of the day before. And the question was, is this just a mean reversion bounce before continuing lower, or was this a bounce that was going to put us back in trend mode? Looking at things this morning, it would seem like it was a bounce to put us back in trend mode. The week isn't over yet. We still have more data. Today, we're going to get the 30-year auction at 1 o'clock. That's the 30-year tip. Still going to get some Fed speakers, and we're going to get retail data. So it's not the biggest data that you could imagine getting. That's enough. It all leads towards, is the Fed going to cut sooner rather than later? And, they've been steady with what they've mentioned. They were going to take their time. That they were looking at maybe 3 cuts in 2024, but not right away. So far, they're sticking to that. Everything else is just noise. So UK is up the least. Hong Kong right behind that. S&P and the NASDAQ around 25% or 1/4%. Better said that way. And the Russell up more than 0.5%, closer to 0.75%. So we're going to get all this data, but really a lot of it is just happening at 8:30. So keep in mind that Waller coming in at 115, he's going to be right behind the 30 tip. So it's going to be like a back-to-back punch in the afternoon, right around 1 o'clock, and then 1:15 when he starts talking. They've got him ranked at a higher impact level than the 30-year. I mean, that's probably true historically, looking back at how often he's moved the markets. I'm sure he's moved them more often than that 30-year. But always pay attention to these auctions. You never know which one is going to light things up. And they're on the clock, so they're pretty easy to keep track of. The data that comes out of Japan tonight could be impactful too. It's foreign bond investment. We'll see. Just kind of keep that in mind for anything that you're swing trading. 8:30, 9:15, 10, 10:30, 11, 11:30, 1, and then 1:15. A very busy day today with almost every hour of the day having some sort of impact. So if the market can set the tone early enough in the day, then it might stick. Might stick. We had an interesting move yesterday that I wanted to share because the more you guys understand this indicator, the better you'll do. So it was around noon yesterday. We were still down here, right around this area, and somebody asked if we could go back up again. And I wrote that it's rare to come up into this red line, the ADR half, and then leave the line and come back again. It doesn't happen all the time. Most of the time, if we leave this zone and we get away from that red line, we're going to go to the other side, or, we'll close somewhere in the middle. Now we can get to that red line and we can just chop about like in a zone and stay there for the rest of the day. But that's not what we did. I mean, we left the zone and we actually broke down. And it's a rare thing to come back up into that red. But what I've noticed is if we do come back up into that red, on those rare occasions where it's happened, we nearly always go beyond it and aim for that yellow line. So around noon yesterday, that was the discussion. And it played out. This isn't I told you so, right? It's more of how can we use this? How can you use it? So now you know a little bit more about these ADR levels than you did before we started today. It's just the average daily range, right? What does the market do on an average day? It goes to the red line. If it gets a little wild, it goes to the yellow line, right? It's what it does on a day-to-day basis. So it's just behavior mechanics. Everything about technical analysis is paying attention to what happened in the past on the idea that it could happen again in the future, right? The more repeatable opportunities, those are the ones you want to focus on. That's not exactly a unicorn, but I mean, it doesn't come around very often. We're still inside the previous week's range. There's still a long ways off in that 50-50 area. The call wall is all the way up at 50.67. And we're closer to the upper edge of the ADR than we are the lower. But, in the grand scheme of things, we are in the middle of the ADR zone. So, this might be broke out of yesterday's range, but so far we haven't really done anything. A little bias leans us to the upside because we're closer to that than we are to the downside, but that doesn't give us very much. We are back above the weekly pivot point. That puts us back into bullish bias. And we have an MDP, which is a missed daily pivot. We haven't hit that pivot yet. Now that doesn't count until tomorrow if we can get all the way through today without having hit that pivot point. The volatility trigger and the put wall are now in the same place, or close enough to it that we don't need to worry about it. No reason to kind of break it apart. And it's also where the zero gamma is. To me, and they don't really put it this way, but I'm going to put it this way. To me, this is support. It's not like a handrail. I don't think I'd want to lean on it. But you know what it would take for the market to get down through that zone? It would take just a monster amount of damage to get us down through there. And even by itself, them rolling the puts up, to me, that's a bullish behavior, right? You know, how you can read the room and you can see meek people and aggressive people just by watching their body language and the things that they do. This is an aggressive move. I think that's a better word than bullish. It's aggressive. I think we're looking at 5,100, 5,200, right? And on up and on up and on up. Unless the data comes out somewhere along the way that is bad enough to rug pull us. And, you know, NVIDIA can do it when earnings come out. I know it can just stop the whole thing, but that's not today. So right now we're doing like a VWAP reciprocation. We're just kind of balancing back and forth along the VWAP. Firms or algos are trading with each other, basically just back and forth, passing the buck, waiting for something to move us. They're not hedging, so whatever the market's waiting on, they're not too scared about it. We do have the data coming out, and of course that's going to matter some, but we can see that the market's not scared of this data. There was an Asian holiday, so some markets were closed. That accounts for a lot of this lower volume. All right, as we get through the day today and into tonight, by the time we get in here tomorrow, unless we break this low, that's going to be the new low by tomorrow. This profile will be a lot more narrow. Somewhere like around this. The only way that it wouldn't be is if we come up and break through the top, right? If we do that, then of course the profile will be bigger. I'm kind of focused around that 50-50 zone because of all this volume right here. If we come back into that zone, we're going to grow that volume the rest of the way out, and it could become our new profile point of control. Otherwise, this 50-11 cog line area is going to own it. Through the day on Friday, we're going to start to whittle away at that profile's point of control. So time alone is going to remove this point of control from this location or by where we hang out up here. It'll be one of those two things. The question is which one. Also, by tomorrow morning, this will look like the low of the profile. So this is a perfect time to mention that comment about when we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. And this will look like price came down and bounced off the bottom of the volume profile, and that we rebounded and went back up afterwards. Just like it looks like we came up and hit that high on the volume profile and we fell away from it. That's not what happened. The profile, it didn't look like this back then, right? I mentioned this because using a multi-day profile like this isn't the same as using it on the intraday. And it's easy to get lulled into the idea that what we're seeing back here is how this profile looked when price got there. And that's just not true. The only thing that this profile is good for is right where we're at right now with the volume and the TPO. Not looking back at these points and focusing on these value area highs and lows and the high of the profile and the low of the profile and saying, oh, wow, look how price reacted when it got to the high of that profile. because that wasn't our high then. By tomorrow, this is going to look like our low, that and this one. So you'll be able to see. The easiest way I can explain to figure this out, every day, take a picture, say at 7 o'clock, try to do it around the same time every day. After about a month, you'll start to catch on to that idea. We have a new VPOC line from yesterday. $49.96. I mean, it's close enough to 5,000, right? That you might as well call it. Besides, liquidity resides on the other side of the pivot, and the pivot would be the round number at 5,000. So it makes sense that we overshoot that just a little bit to get into the pivot. Because they've rolled the put wall up and matched it with the volatility trigger and the zero gamma level, I really don't see how we're going to make it back down to 5,000 unless something really bad happens anyways. The gap is closed that we had talked about from this event back here on Tuesday, created this very large liquidity gap. So that zone finally got taken out. We don't mention it very often, but the blue line down here is starting to curve back up again. It's a little bit of a wave. And remember what this indicator is doing is it's asking how far away from the moving average we are, from the 10. And what we find is different markets have a different distance. Some markets are really volatile. They can get a long ways away from their 10 before we consider them overbought. Other markets really don't get all that far away from it at all and hold near it constantly. So we can't just use some generic statement like, oh, well, as soon as price gets more than 2% away from the 10, it's going to mean revert, because it would depend on the company, or in this case, it would depend on the futures product. So we want to look at what the average is for each company or for any product that we want to use. So we kind of figure out what its average is. But it doesn't stay constant either, which is where that blue line comes in. The ES has a history of expanding above its 10% or its 10-day moving average by more than 2%. It's gone into the threes before. And if I was to go back far enough, we'd see it has gone higher than that. But on average, somewhere around 2.5 to 3 is that turning point. I'd say 2 looks really good, right? That's where my mouse is right now, really close to 2. What that blue line shows us is, on average, is that changing, within the time frame? Can we consistently expect it to be 2? No, it's going to adapt and change with volatility and everything else. For a while, it got really low. The average wasn't at 2 before we were getting a turn. The average was at 1.5, and then it got even lower than that. We were turning back towards the 10 before we were even 1% away from the 10. But it's starting to expand again. Now, I look at that blue line a lot like volatility itself, because it's just an easier way to wrap your mind around it. The S&P is getting more volatile again. Now it ebbs and flows. We can probably line a lot of these up with events, with these peaks and troughs. FOMC, QRA, big CPI events. but we are on the curve back up. Volatility is expanding. Volatility is a nerd word for movement. So when we say that the S&P is expanding in volatility, it means that we can go farther on a day-to-day basis, that our daily range is bigger. The daily candles are larger. So it directly affects you as a trader, not some hypothetical like, oh, who cares? I don't trade options. You should care. When the S&P has an average price range of 30 points in 24 hours and only moves 12 points in a regular trading session, you'll care. We're still within the weekly expected move, still underneath Friday's close or Monday's open. The discussion about going long if we hit the edge on a Monday or Tuesday so far has played out. And just like we talked about, it wouldn't have been a real bullish recovery, right? It'd be more of a not bearish. Not bearish does not mean bullish. So bullish neutral. Only 0.56, 0.58 above the 10-day. That's not overbought. We didn't move too far, too fast. It doesn't owe us mean reversion or pullback. Put it on the week. 3.2%. We've been higher than where we are today. We're not overbought. We're not overextended. It doesn't owe us a pullback. We're not looking for mean reversion just because there would need to be a reason for us to go down at this point. We have moved relatively fast, trying to recover back from the move to the downside. And there's a lot of work to go just to get back to where we were. But we're not overbought. The Bitcoin proxies this morning are already on the move. We can see Bitcoin had an inside day breakout already, trying to continue with that upside drive. It's very close to the ADR half. Names like Riot, Coin, MSTR, very likely things on the miners side like Hut, Hive. Those are all doing really well this morning. So Bitcoin and Bitcoin proxies. Behind that, we've got biotech, gold miners, banks, and that's it. That's where it stops. Anything below that isn't up enough to reach our criteria. So we're continuing to get that fade in US dollar Japan. Just consider US dollar Japan as a proxy for the combination of the dollar index and the 10-year. It really isn't that, but it's an easy way to wrap your mind around why do we look at the US dollar Japan. It's like we're combining these two symbols into one measure. And trust me, it's not that, right? But it's the easiest way to get you to wrap your head around it. So if this is going down, then that's what we're going to expect to see out of the dollar and the 10-year. Should, right? That's what we should see. Doesn't mean we're going to see it. With everything that's going on in Japan and the data that we're going to get out of there tonight, if this does continue to work its way back up, especially if we're going to get into this half back soon, find support on the half back, start to rally, then that 150.80 or even 151 if we're, 150.88, that's going to be a threat and an issue. This rising just to get up into that means that it's going to find support and make that move. So we would expect the same out of the 10-year near that half back, looking like it's ready to find support and make the move. Same with the dollar or the dollar index. So it's looking ahead at what could cause us grief. Now, this half back bounce, so to speak, if we even get it, isn't lining up with a rejection zone yet. Not really. I mean, for the ES, we do have this gap close, and it is closed now, technically speaking, but we're inside this box. We're inside that really big bar. Let's get out of that bar first, get through the liquidity that's above that zone, and prove that we can keep it. Maybe get a Busby up there or something. Otherwise, it really looks like this will be our rejection point as this becomes our bounce point, and we see the dollar and the 10-year making its way back up while we see the ES and the NASDAQ take that rejection with a resistance that holds, and it starts to fade back down, maybe back into that 10-day again. It is good as we're getting a little bit of lift in the bonds, but they're not even halfway up, right? Just like these aren't even halfway down. So it makes sense. If we're going to get this bounce on the 10-year, then we're going to get this rejection in the bonds. So this is kind of what I got my eye on, right? The 10-year, the dollar, US dollar, Japan, that half back level, catching support, beginning to make a move up, while this big bar, this event bar, becomes our resistance. And if it doesn't, then the Globex high before that bar lines up with our ADR half, and that becomes the next resistance. It could still line up with a half back bounce down here. It won't always work like this, right? There's times where the dollar will go up with the S&P, or the dollar will go up with the NASDAQ, and we've seen it before. It will happen. So we always got to approach it each day and kind of ask, are they doing what they're supposed to do? Because sometimes they don't. You want to look for signals that kind of indicates that they're not behaving correctly today. And when that happens, just leave them alone, right? Don't try to find some other solution. This is the equal weight S&P, RSP. And you can see that we're underneath this high back here. So, when we think about the impact of the Magnificent Seven and their overwhelming influence on the S&P, the equal weight, I mean, it's doing good. but it's not even up to the highs from back in December. USO is down the most this morning. They closed near the low yesterday, and then we just broke down from there. I mean, it really looks like it's trying to get back inside of yesterday's range, but it's got a lot of work to do. We are getting a nice crossover on the MACD in deep negative territory. So if we were looking for like the start of a move back up after a pullback, on the lower time frames is where you spot the turn, and on the higher time frames is where you validate the trend, right? So if there's going to be a turn, then we would want to see it in that lower zone first, lower time frame. USO did what it was supposed to do. It came back up into resistance. That resistance held. It fell back. But the question now is it going to make it down to the halfback and then all the way back down to this 67 zone? Remember, we're expecting energy basically to pretty much hold the zone. It's got a collar on it between the White House and intervention, government intervention. We don't expect energy to get too expensive, and we don't expect it to fall into the dirt. There was a huge move in gasoline, right? We've seen that in the last few days. But this isn't gasoline, so just in general, let's see what we get with this. If it's going to get back inside and try to retest that 73 again for a breakout, or the bigger the base case argument that we're going to come back down and retest that 67. Solar's up this morning. Not a lot of flows behind it, more just prints than anything else. Having a market rally on solar is not exactly ideal, right? So behind solar, we've got pot stocks. Again, having a market rally on pot stocks, not exactly, something to give you that warm, fuzzy feeling. And behind that, small caps. We kind of need more than that, right? So we can see bonds, precious metals like silver and gold, airlines. Got an inside breakout on that. Nice breakout too. So this was a really good follow-up bar yesterday from red to green. Take it back even one step farther. Nice recovery bar. And then a follow through red to green. And we're already working on an inside day breakout again, even higher. The reason that this is a red bar, but hollow, as opposed to a red bar that's solid, is a red bar that's solid opened here and fell and closed there. and it's also lower than the previous close. Green bar closed here. We opened all the way down here, and we closed up here. So we closed higher than we opened, but we still closed lower than the previous close, and that's why it's red and hollow instead of red and solid. Still, this is a nice recovery, and if we back it all the way up to here, then it's been a nice run since the 6th when we got out of this range. And that's a Busby. And now we're doing what we often do after a Busby, which is start a trend. Looking at it on the weekly, though, we're tingled right up into those 200 period moving averages. And I mean, they're kind of flattening out. A downward sloping 200 would be a really bad deal, but these are basically flattened out, and it's going to give us a chance to actually try to get around them. You can see how they've been a significant level of resistance for years now with jets since COVID, trying to get back above them. If crude stays low and the airlines can price in, say, some forward future contracts where they can continue to get it at this price, even if it goes back up, that's going to give them some edge for some later earnings if they don't fumble somewhere else, right? So there's a possibility for, something longer, some, longer duration trade here. And we're through the halfback. So that 1860 is really what we need to keep. Depending on the product that you want to use. I mean, that's not much of a dividend. I'm sure individually you could find something better in the Jets ETF. So really, it looks like finance this morning and those Bitcoin proxies. I don't have the list yet, but all the firms have a Bitcoin ETF now, right? Like BlackRock's got one, Fidelity's got one. My gosh, they all have one. And I need to put the list together. I just haven't done it yet. But if you're looking for something to trade today, Riot, Mara, Coin, Hut, Hive, all of those MSTR, they're the ones making the biggest move today. So there's certainly something that you can focus on in that direction. Just kind of keep in mind how extreme this move has been, because this morning they're opening up, take Riot here, above $18, so up near this high. MSTR didn't wait. It's already broke. Man, this thing's crazy expensive. 789 and 791. So it's all the way up here this morning. That would be where the day trade flows are going to be heaviest. It's not even in tech this morning. Bank of America, Wells Fargo, they're getting a little bit of flows. It's not much yet. So what's going to happen with the S&P today? If we get some semiconductors making moves, and semis are directly connected to Bitcoin. So if we start getting lit up in the semiconductor space today, and or the FANGs get on board, because right now they're just not. That doesn't mean they're down, because they're not down. They're just not up. Then we can get a really good move in the S&P today. A nice follow through from yesterday that could get us back up, say, near those highs, that 50-50 zone. That would be what I'd be watching for. Keep my eye on semiconductors. You'll start to see, option sweeps starting to come through there. And then keep your eye on the Mag 7. You can just use, the NY FANG. We already know that banks are doing good, but if you wanted to swap that out for something like SMH, that way you're watching the semi space and the FANG space to see if we're going to get that follow through or not. Yeah, look at the tick chart from yesterday. Cumulative tick. I mean, it was positive all day, but we had a couple of those green line crossovers like it was going to just, give it all away. And then we just kept on going. In the later part of the afternoon, though, that green line crossed through the upper edge and led us to the upside. I talk about this thing frequently. So we can rally today, but we're going to want those semiconductors and or the Mag 7. And with the econ today, remember, it's almost every hour that we've got something else coming in and something else and something else. So it's going to be nonstop all day with the distractions and interruptions. Everybody be careful, be safe. I'll see you all tomorrow.